Joining us now, Jared Woodard, BofA Securities investment and ETF strategist, and Barbara Doran, BD8 Capital Partners CIO. Guys, welcome. Jared, this has been sort of a hated rally that we've been experiencing all year, it seems to me. It's been uneven, benefiting the largest technology stocks. So what do you do at this point with the Fed probably pausing, but even if not, probably at about the end of its hike cycle?
Yeah, hey, John, I think it's true that this has been a hated rally this year. And our advice this year has been that investors should use rallies in tech and other kind of mega cap growth assets to take profits and to invest in other parts of the market where there's better valuation opportunities. I think that the top priority for investors this year has to be to capture yield where they can, to protect against deflation and the recession we think is coming, and to keep hedges in place if the stagflationary risks from 2022 prove to be a continuing threat.
Okay, so how? You say preferred stock ETFs?
Yeah, we think for the yield part of it, I think preferred stocks are a great place to go. PFF, one of the ETFs we cover, these have yields approaching 7%. These are very secure dividends. These are companies these are preferred stocks that have given you reliable dividends even in a financial crisis. Even in 2008, only 3% of those preferred dividends ever faced a cut. And these are some of the highest yields in the market today. So if you're looking for income, I think these beaten down preferreds are a top place to look.
Now, Barbara, you say you're not buying here. You are trimming bloated positions, but trimming and then what? Are you rotating into something else, or are you sitting on your hands for a minute to see which way things go?
Yeah, I'm sitting tight for now. Not that it's going to be that long, because I fully expect there's going to be a bit of a sell-off, which we're starting to see today in some of the tech names, which ran up, and of course are now you're seeing momentum players get out. But I think there's a lot of money on the sideline, particularly retail, that want to be in these names. And I think you have to be in them for long term. But I'm just waiting. I had added, really beefed up my tech positions several months ago, and I'm fully invested in waiting there. But I'd also added names like Starbucks or Expedia, which was super cheap, particularly compared to Booking. And I'm just waiting on those. So right now, I'm not doing much. I'm waiting for some further pullbacks in some things like Salesforce, which I have as a core position. But
I wonder, there's some investors who have been waiting all year, right? Mike Santoli was showing us yesterday how there hasn't been this inflow into ETFs, and if you were waiting all year, it was a mistake. So I guess what we need to know from you, the folks at home probably need to know, waiting for what? How much of a pullback, right, before you get in, and what are you particularly looking to get into?
Yeah, I mean, you're talking to me, right?
Yeah,
I think that's always a question. It's not only one of the toughest things is when do you sell, but when do you buy, and how much of a pullback will there be? I mean, right now we're in a bit of a news vacuum. Just earnings are done, the debt ceiling is resolved, and we're waiting for the Fed next week, and it's widely expected they will pause. But it's really going to be important what their guidance is and what the CPI number on Tuesday will be and the PPI to see if that little bit of promise we saw last week with wages coming down a tad, average hourly work week coming down, signs that inflation is still coming down, if gradually. So I just think we need to see a much deeper where you see much more momentum coming out of the tech names in order to make them a buy again. I think it's too early for cyclicals. Cyclicals typically do well when you're cutting interest rates, and that does not seem to be in the cards anytime soon for the Fed. If anything, they pause, maybe they go up 25 bips. They're pretty much done, that is for sure, but it certainly doesn't seem likely they're going to cut. So cyclicals are not a place to go either. So I think you just have to, financials have been oversold, and they've been rallying here, so there's probably more to go there.